So you want to make more money as a trader. This is a common issue, right? Because it is an issue that a lot of traders face. I used to see this a lot in evolution traders a couple of years ago when people would come into the room, especially those who were trading on the options side when options were a little bit more popular with the demographic of traders out there. Now it tends to be futures, but again, tomato, it's all the same stuff. In order to make more money, it doesn't mean we hold our trades longer. It does not mean we widen our stops. It does not mean that we have to take, this trade that lasts for 4 or 5 hours, or, just gets one more candlestick and another candlestick higher or another candlestick lower, depending on if you're going long or short. If you want to make more money, this is probably the only business on the face of the planet where it doesn't necessarily take more time to make more money. It takes more capital. So what you need is a bigger position size, same move. Okay. This is a hard kind of concept for a lot of traders to understand. And the reason why it's a little bit more difficult to understand is because you don't want to increase your position size, number of contracts, number of shares, because you don't want to take a bigger loss. So what you do is tend to hold that one smaller position longer, hoping that it goes a little bit more in your favor. But what tends to happen more times than not, it gets up there, maybe it goes a little bit more and then comes back down. And the moment it starts to come back down, you tell yourself, well, it's okay. I'm still in the profit. I've still got my hard stop loss intact. It'll come back. Or let me just give it a little bit more time to see if this move's going to pan out. And then it comes back a little bit more. And the moment it does that, it changes something up here psychologically. I want you guys to understand that trading is around 90% up here. I can teach a 10-year-old to click the buy button, click the sell button. When the stock does this, I want you to do that, right? Very simple. When the price or this candle gets over this level, I want you to do this. If it breaks down and it's red and we're going long, I want you to do that. Very, very simple to understand. Now, that's also why there's a million different strategies. There's a million different indicators. Each indicator, each strategy is obviously going to provide you a little bit of an edge. And in this business, that's all we're looking for is just 1, 2, 3% of an edge. Majority of traders are only profitable at around a 50 to 60% win rate. And that doesn't mean every single day that they win 50 to 60% of their trades. Some days they might lose 70 or 80% of their trades. But over a series, over a body of work, they tend to be around a 50 to 60% winning trader. Now, again, I've talked to people, I've met people, I know people personally that have a profitable trading strategy that only win 30, 40% of the time. Now, you may be thinking, how does one become profitable only winning 3 out of 10 trades? Well, with a tiny stop loss and a lot of trades, you're going to have those trades that are going to go for 2, 3, 4, 5, 6, 7, 8, 9, 10 R, right? And you have a 1 R stop. Now, again, it's different strokes for different folks. Every strategy is different. Every strategy is going to provide that little bit of an edge. But the majority, right? The majority of strategies out there hit at around a 55, 60% win rate if you follow it correctly. And if you have rules, and if you have stop losses in place, and if you have take profits or areas of interest where you want to make money. So getting back to the overall problem in the situation that I see a lot of traders have is that they want to make more money, but they don't want to increase their risk. So there is no back door here, okay? You can't go around the side of the club and get in through the back. You got to go in through the front, get the full pat down, show the ID, right? Pay the cover charge. There is no let me slip you $100 and swing me in through the back in trading. The moment you do that is the moment you will be so screwed up and put yourself in this hamster wheel of sometimes that works and other times it doesn't. And when it doesn't work, it tends to hurt more than when it works. So I used to tell a lot of people, especially on the option side of things, I used to see guys that would come into the room and let's say, for example, they would trade 1 or 2 contracts and they would see someone else post up, let's say $500 winning trade. And that trade only went up, let's say $1, right? Let's say they bought Tesla, it went up $1. They had 15 contracts or 10 contracts and they made $500. There'd be someone else out there who took 1 contract and only made $60 or $70, right? Or $50, whatever the case may be. And then they would see it happen again. And then they would tell themselves, well, I'm having some success here. My edge is working, my strategy is working, but I want to make a little bit more money. And what would tend to happen more times than not is they would get into that next particular trade. And instead of taking profits off the table where they normally take profits off of, or where they should probably take profits off of because they can see something happening in the market. Let's say, for example, you're trading in the NASDAQ futures and you have a 20-point take profit and you see it go up 10 points, 15 points, and it hits 17 points. And then it kind of comes back down a little bit more. And then it's trading at like 14 points in the positive and goes back up to 16 points again. You can almost have that gut feeling, that intuition, that trader's intuition to kind of sell your position, just kind of lock in those profits. This is probably going to stall out. But what a lot of traders do is they have that normal, 20-point take profit. And let's say, for example, they trade 3 micro contracts. Well, instead of, making, I don't know, $90 on the trade, they want to make $150, $200 on a trade. So instead of increasing the contract size and keeping the emotions low because we're not realistically looking for a bigger move, we're just putting more money on the table. They hold that one position and it goes up to 17 points and comes back down to 15 and goes back up to 16, and then it's break even. And at this point, you get very frustrated and you get upset, and either you close the trade for a scratch or a small loss, or you hold it and now you go into some drawdown. And it's when you go into that drawdown is when that next trade or the preceding trade after that is where you're not thinking clearly and you oversize, or you double your size, or you tend to take a trade that necessarily doesn't align with your strategy because you're looking for a new area of opportunity to make back what you just lost. So again, in trading, the only way to make more money is by increasing your position size, not by getting a bigger move. Those big moves come organically. They just happen. You don't have to sit and hold and wait and hope. They just kind of do it on their own. And you never even think about it. But if you don't want to size up, meaning go from 3 contracts to 6, then you can't really expect to make more money. Put your foot on the gas. Don't rush, especially for a lot of you guys out there who are trading on prop firm accounts. Maybe you're under a 30-day evaluation before your billing cycle renews and you have to pay again. Those traders tend to force trades. Those traders tend to hold trades a little bit longer. Those traders tend to go off script. The number one thing I can tell you guys all to do and to focus on is to stay on path, to stay on script, But as long as you guys are staying on script, the money will come, okay? The money will definitely come. And I know because I've seen it firsthand, and not just with my own trading, but I've seen other traders that I've worked with. And when you finally get that breakthrough, you build that cushion, all of this hard times, all of these losses, all of these negative days that you had, it's just a blip in the road. You've been there, seen that, done that. It's got no effect on your emotional tolerance anymore. It's got no effect over your psychology anymore because you've worked through it. But again, if you want to make more money, you have to increase your position size. We do not look for 2R. We do not look for 3R. We do not look for 4R. If that's not your strategy, right? So for example, if you've been doing well or decent or having a little bit of a particular edge with a 1-to-1, right? A 1R trade or a 2R trade. If you want to make more money, you double your position size. You don't look for 3Rs or 4Rs. That's not in your trading playbook. Your playbook is calling for 1R, for 2Rs. So for example, if we're looking at the NASDAQ futures, the average true range is anywhere between 15 and 25 points. So if you're a 1-to-1 trader, you're looking for 15 to 25 points. If you're a 2R trader, you're looking for like 30 to 45 points. You can't really take a strategy that's aligned with anywhere between 15 and 40 points and say, well, I want to make more money. Maybe this goes 50 or 60 or 70 or 80 or 90 points. It doesn't make any sense. You want to make more money, you increase your size. Now, for those of you out there who are thinking to themselves right now, well, if I increase my size and I lose, now I'm not taking a $200 loss, I'm taking a $400 loss. That's correct. 100% correct. You're going to go from a $200 loss to a $400 loser if you double your position size. Now, the question remains, are you emotionally ready for the $400 loss? Because mentally, you're telling yourself that you're ready for the $400 winner, but are you ready? And is your account size sufficient enough to handle losses at $400? And I'm just using fictitious numbers here. You know, it could be from $100 to $200. It could be from $50 to $100. But are you ready to double your losses if you're looking to double your profits? You're never going to have home run trades, and you're never going to actually really grow an account trying to sit back and hold for longer. Okay? That's when mistakes tend to happen. That's when you start fluctuating your stop loss. That is when you start over trading. Again, this stock market, my friend, has been here way before you, and it's going to be here a lot after you no longer walk this face of the earth. So what are you in a rush for? If you need to pass right this second, we've got to start reanalyzing and reassessing what we're actually really doing that is making us feel that we need to pass this week, or we need to take this payout this week, or we have to make $1,000 on this, particular 2 days or 3 day span. Why are we feeling like that? What outside pressure outside of trading is making us feel that way? Because that issue needs to be addressed first. Now, I'll throw a scenario out there because I talk to people in my trading community at Evolution Traders, and I see what's going on, and I hear things, and I can just read the room a little bit sometimes. But let's say, for example, you have 5 evaluation accounts that need to pass within 30 days before you get rebilled. Why are we going to rush and not pay the rebill? Let's say, for example, we're up $1,000 and we need to make 3,000, or we're up 1,500, or we're up 2,000, we need to make 3,000. But we're gonna get rebilled in, let's say, a week's time from now. Why are we going to try to make more money and not pay the re-up fee? Because again, yes, you might pay the renewal fee for an extra 30 days, but what it's going to do is provide you a level of comfortability that's going to keep you in the business and make you pass at a much higher success rate. Okay, so once you do pass, it's going to be a big weight off of your shoulders, because now you're going to have those 4, 5, 6, 7, 8, 9 funded accounts that you're going to roll into. Now, if the problem is having to pay a little bit more, because I know some of you guys are out there trading Apex Trader Funding, and you guys buy these evaluations on these 80 or 90% off sales, or let's say it costs $15 to $20 for your evaluation, and then come rebill, it's more like $40. If the problem is paying the $40 for an extra 30 days, We need to address that problem, because that problem has nothing to do with trying to make more money on these charts. It has nothing to do with the market. If we don't want to pay more money, then let's not sign up for so many accounts. Let's maybe work on one or work on two. So that way, if we do have to pay an extra set of fees, maybe we're only looking at $40 to $80 for an extra couple of accounts for an extra couple of an extra month, right? So if the problem is the money and not wanting to pay it, that's a different problem, and that's going to force you to make decisions that are not going to be the smartest. So if you want to make more money, my friends, you have to double your size. I learned from a trader who's been around from a very, very long time. They're playing 500 shares, 600 shares, 1,000 share lots. That's how you increase your size, is by scaling up, not by taking the same trade and looking for $4 or $5 on a particular name. I trade Tesla, and I'll give you a little bit of an example. I trade Tesla all the time, and my position sizing right now is 10 contracts. Would I love to make $1,000, $2,000, $3,000 a trade? Sure. But right now, with my strategy in the ATR and some things like Tesla, I'm looking for that dollar. So if I can make 40, 50, 60, 70 cents times 10 contracts, that's okay with me. I would love to make $1,500, $2,000 a trade, but I also know that when I do lose, I'm going to be looking to lose $1,000 to $1,500, and I'm not ready to stomach those losses. So instead of trying to push the issue, I have to remain patient. I'm not necessarily telling myself that, hey, if I get $2 out of Tesla or I get $3 out of Tesla with the same amount of risk, I'm going to make so much more money. Well, guess what's going to happen? The probabilities of me hitting $2 or $3 on Tesla is a lot lower than the odds of me just taking my $1, $1.25, $1.50 off of Tesla. Does that make sense? So if I want to make more money, I'm not looking for $2.50, $3. I'm looking for the same $1 to $1.50, but I got to add more contracts. I don't hold longer. You see what I'm saying? I hope you guys understand. Hope this makes sense. I hope this helps you. Again, if it does, like, comment, subscribe. If you guys would like to join the room, that link is down in the description box below. I'll see all of you guys on the inside.